The number of times that we've uttered this is, an incredibly important economic data point over the last couple of years, and we've seen very little reaction from the stock market points to the fact that it's probably nothing we're looking at in the next week or so. But we go back to last week, and we were talking about Jackson Hole, and we discussed how, Powell really is focused on employment. Inflation is where it needs to be from a target perspective. Many of us believe it's transitory and is going to fall back to the target, 2% range or so. And so if we look at employment, there are a number of open questions. The concern for me in looking at these numbers is that I think that there has been perhaps a naivete around the effects of the Delta variant on consumer behavior. You don't necessarily need to have lockdowns and increased social restrictions to have this behavioral response from consumers. And so I think as we look at something like leisure and hospitality jobs numbers that were essentially flat in this report, I think that there are going to be some improvement in the openings versus the demand for these types of jobs. But I also think we need to be cautionary that we haven't hit yet this Delta wave here in the Northeast, and that the consumer cyclical trade may be a little bit softer over the next couple of months.
Yeah, and, Jim, you had Dr. Gottlieb on today saying, I think he was saying seasonality. I know it's kind of a dirty word in the scientific community. We're not going to talk about, the virus, and we're not epidemiologists. But Gottlieb this morning on CNBC said he thinks we're going to have another wave in the Northeast, kind of like we did last year, and hopefully that will be it. And we only talk about this in as much as there may be a shift in consumer behavior, which means a shift in earnings, which means a shift in GDP. What's sort of your take on the whole package?
Well, we're not epidemiologists, but I think we're doing a little bit of hand-wringing here on the concept that the market is at all-time highs when this Delta variant, as Shannon very well pointed out, hasn't really hit yet in the Northeast, and it may. But here's the thing. I think when you look underneath the index levels, you see that the reopening trade has just fallen flat on its face for the last 3 months. So, Sully, you pointed out, I think you said 52% of the S&P 500 is up 50%. Let me give you a different way of looking at this. 95% of the names in the S&P 500 have gone through a correction at least once this year. Many of them more than a correction, many of them more than once. So, when we're talking, as I said, about maybe hand-wringing at the level of the markets, you have to look underneath the index and see that there's been a rolling correction that's gone on for quite some time. Now, I think we could get a correction at any point in time, but with a Fed that is, frankly, still accommodative. I don't care what they do with taper. They are accommodative until they raise rates, which is at least a year off. Any dip is likely to be far less than a correction, as we've seen over the last 10 months. I wouldn't expect more than a 5% decline. More to the point, there are huge opportunities in the reopening trade right now, particularly if Dr. Gottlieb is right.
Yeah, and, Michael Farr, that's kind of the point. I mean, and not to be glib about it, but whether or not the Fed starts to taper in November or January, does anybody really care? Is it going to matter to the markets if it's another 30 or 60 days? Tapering is not tightening. They are very different things. We know it's coming. It's just a matter of when. That's why I was being a little bit sort of blasé about the jobs market, but you're the DC insider. What do you think?
I think that the short-term market cares, Sully, and the long-term market doesn't. Short-term market cares about things like today, and you'll see the risk trade go on. You'll see the Nasdaq that's so dependent on low rates for longer starts to rally a bit today. This is a short-term knee-jerk reaction. Longer term, I think you're exactly right. But I think we are also at risk here, Sully, of maybe leaping to the most obvious, easiest conclusion and perhaps not considering other options. I mean, okay, we've got COVID at the end of August. We've also got, kids going back to college. That can affect some of the unemployment and jobs data. What we have, though, is a lot of jobs opening. And it's not so much that, okay, so we don't have people taking those new jobs. That's the problem. Is it really COVID, or are there other reasons people aren't coming back to work? When I see data like this, I think you have to stop and be a little bit more thoughtful, because we are seeing trends in terms of the workforce participation rate. We know that wages are up. There are incentives for people to come back. Maybe we ought to scratch the head a little bit here and, because this is another little whiff, perhaps, of stagflation, and that's starting to come into my worry list.
Well, the kids being back in school is probably going to help add a few million jobs, let's hope, because really, I mean, for them to be out of school last year was just devastating for so many working families.